Welcome back. Let's talk markets then. Ashi Anand, CEO and founder at IME Capital, is now with us. It's a PMS company. He manages two funds. One of them is the Micro Trends PMS, where he's got holdings in Shobha, Shriram Finance, Zomato, State Bank of India, Infi, Axis Bank. And the other one, which we've often discussed, is the Digital Disruption PMS, with holdings in names like Zomato, PB Fintech, Nykaa, InfoEdge, Paytm, etc. Ashi, thank you very much for joining in. Let's talk about the Micro Trends portfolio, right? There's a big event coming up. Have you made any changes in your portfolio in the last 1 month? Because I was comparing your recent fact sheet with the prior one. It appears that you've increased your cash position, brought down your stake in stocks like Bharat Electronics. So what's the construct looking like?
Firstly, thank you so much for having me on the show, and you've been quite attentive, it seems, in terms of our fact sheets. Yes, we have been kind of repositioning a bit going into the budget. I think at the first level, what is it that we're looking for from the budget? What you have seen is over the last 3 to 4 years, you've consistently seen kind of the budget prioritize capex over kind of revenue expenditure. Now, given the election results and given the fact that consumption has been weak for many, many years, you are expecting some kind of a shift in terms of the current budget, right? And you are probably looking at some level of consumption expenditure increasing. So a combination of kind of sorry, if I can just rephrase. So you're looking at consumption expenditure kind of being increased, but you are also expecting the overall capex momentum to really continue. And I think the whole RBI special dividend, which would have come in this year, would actually help this combined continued focus on capex as well as strong consumption demand. Now, the reason we have repositioned the portfolio a bit going into the budget is last year you've seen very strong growth in overall capex spends, in real estate, in all forms of capital formation. Those parts of the markets have actually done very, very well. And we are expecting some kind of a balance this year in terms of sectors like consumer, IT, pharma, some of these really coming back, and possibly some moderation in the strong outperformance of these capex-heavy themes, which is where you've kind of seen. So what we've done in terms of portfolio repositioning, in the previous kind of month, what we had done is we had reduced some of our capex and moved towards consumption. Going into the budget, we have booked some profits from real estate and increased cash to really kind of position based on how the budget comes in.
Okay. So, Ashi, hi, good to have you on the show. Now, what is the thesis and the base case expectation on capex? I mean, capex is already, the thing is, stocks have already run so much. We may still get good announcements tomorrow, and that could create more of a sentiment boost. Look at the market today, right? It's still celebrating the same PSU stocks. But once the event is out, what do you think is your medium-term positioning going to be on this part of the market?
So I think our medium-term positioning continues to be very robust, right? What you are seeing in terms of capex is after a decade of very, very kind of muted capex spends, you are coming back to kind of an environment where there are multiple kind of drivers of capex, which are all kind of firing at the same time. Partly this is PLI incentives. You are seeing some kind of very interesting spends coming in terms of new energy. There is a larger shift in terms of a value migration happening away from China towards India. A lot of these kind of sub-trends which are playing out, all of these should lead to a very favorable medium to longer term outlook in terms of capex. The main call, however, is in terms of shorter term price momentum. I think a lot of this medium to long term story is already partly kind of priced in, and possibly a lot of the short term momentum in the space has been very, very high. So we're probably kind of expecting some kind of a possible time correction. So if you're just looking at it, possibly capital goods companies may not perform as well in the near term, but over the medium to longer term, we still see a lot of kind of value. Now, all of this is just purely focusing on kind of fundamentals. Market sentiment in the space and market momentum in the space continues to be very high. If stock prices continue to be driven more by a narrative than near-term valuations, the space could continue to perform.
You said you've raised your cash holdings. So once the budget is out of the way, will you look to deploy it, or do you see an imminent correction in the market and that's when you will look to utilize this money?
No, so I think the cash that we have created is driven more by being able to have some amount of liquidity available to position ourselves on the kind of budget day or immediately after the budget. It's not that we are seeing any imminent correction in the markets. I think the longer term outlook for Indian equities continues to be extremely robust. You are likely to kind of see rates starting to kind of decline towards the end of the year. There's no real reason we're seeing for sharp decline in the overall markets. In certain pockets like small caps, etc., there may be some level of froth, but I don't think so. This is not a structural cash holding. It is kind of tactical creation of cash to be able to position ourselves going into a key event.
Okay. And then one final word then on your digital disruption portfolio, since you track all the listed companies very carefully. Any interesting trends that you've observed in any of the stocks that you'd like to highlight for our viewers?
So I think more than specific stock, right? I think core parts of the thesis are really playing out very, very well. So just to kind of recap what the core thesis is, we believe they are very strong enablers for sustained high levels of revenue growth for these companies over the coming decade, not just over the short to medium term. This accompanied by a shift towards not just profitability, but high levels of profitability should lead to very strong value creation. I think you are seeing this play out very clearly across companies. Growth is sustaining at high levels. Profitability as compared to what people were looking at a year back, right? I think across the board, people are now beginning to realize and understand that these companies are turning profitable. What I think markets possibly yet are underestimating is how profitable they can become over the longer term. How attractive return ratios are going to be, how attractive cash flow generation is going to be. Now, a combination of both of these itself is enough for very attractive value creation. But the whole additional kind of trigger comes in when we're really looking at them entering adjacencies. So if you look at Zomato's entry into Blinkit and the kind of value creation that's happening there, we believe once a platform is built, these companies have the ability to enter adjacencies at a relatively low cost.
Right.
And if successful, this can create a lot of value. So I think we're seeing this very clearly across companies.
Indeed, that's played out very well for you. Thank you very much, Ashi, for joining in. We'll continue this discussion another day. For now, we need to slip into a very short break. But on the other side, we've got a special discussion lined up. Jimit Modi, Deepak Shenoy and Rajesh Baheti will join in to weigh in on the regulatory red flag on the sharp surge in F&O volumes.